Imagine price hitting a specific level twice, stalling each time, and then dropping like a stone. That's the double top, one of the most reliable bearish reversal patterns. It forms after an uptrend, creating a peak, a moderate pullback, and then a second attempt at the same high that fails. The market tried twice to push higher and simply couldn't. The key is the neckline, the support level formed by the low between those two peaks. When price breaks decisively below that support, the trend has officially reversed. The measured move target is often the distance from the neckline to the peaks, projected downward from the break. Volume is your friend here. It typically dries up on the second peak and surges on the breakdown, confirming the sellers are in control. Now flip the chart upside down and you get the double bottom, the equal and opposite bullish reversal. It appears at the end of a downtrend, as price hits a low, bounces to form a temporary high, then returns to that same low area. The market probes twice, finds buyers both times, and refuses to go lower. The neckline here is the resistance level created by the interim high in the middle. When price finally breaks upward through that neckline with conviction, the downtrend is dead. The target is calculated the same way: measure the height from the neckline to the bottom and add it to the breakout point. Watch for increased volume on the breakout and potentially on the second bottom itself, as institutional money often accumulates there. The beauty of these patterns lies in their symmetry and simplicity. They represent a clear battle at a key level. A double top shows the bulls exhausted, unable to push higher despite two attempts. A double bottom shows the bears defeated, unable to drive price lower on a second try. Both define a clear line in the sand, the neckline. Until that line breaks, the pattern is still in play and could fail, turning into a continuation pattern instead. Patience is crucial. Premature entries lead to whipsaws. Trade execution requires a clear plan. For a double top, you typically enter a short position on a close below the neckline. Place your stop loss just above the second peak to protect against false breaks. For a double bottom, enter long on a close above the neckline, with a stop below the second trough. Always wait for confirmation with a candlestick close and preferably a volume spike. The pattern is only complete after the breakout. Before that, it's just potential. Be aware of common pitfalls. Sometimes a double top or bottom can look very similar to a range or a flag formation. The distinction is context. These are reversal patterns that occur after clear trends. Also, do not mistake a simple pullback for the clean M or W shape. The two turning points should be distinct, with a significant gap between them, not tiny wiggles. Wider patterns tend to be more reliable than very narrow ones. Time frame matters significantly. These patterns work on any chart, from 1 minute to monthly, but higher time frames yield more reliable and larger moves. A double bottom on a daily chart is far more significant than one on a 5-minute chart. The logic is the same, but the institutional money behind higher time frames is much greater. Always zoom out to see the bigger picture. You can also combine these patterns with other tools. Look for divergences on the RSI or MACD at the second peak or trough. If the second top shows a lower RSI high while price stays equal, that's hidden bearish divergence, reinforcing the reversal. A bullish divergence at the second bottom adds weight to the double bottom. Support and resistance zones or trend lines intersecting the neckline make the setup even more robust. In practice, these are some of the most profitable and teachable patterns in technical analysis. They force you to respect levels, wait for confirmation, and manage risk. They are not magic, but they provide a clear framework for identifying turning points. Master the double top and double bottom, and you have a foundational skill that improves every other method you use. Trade them with discipline, and they will serve you well for years.